Congratulations, my acolytes of success, because you are watching the Success Channel. My name is Paul Vasquez, JD. I think that's how you might find me. On the YouTube, I am the president of Tax Lab, Pro Business Solutions, co-founder of the Singularity Network, and inventor of the Hat Tack. And I've got one right here. They're coming in this little pillow box, which I've fashioned this one together before I go through manufacturing, so I can figure out what I'm ordering ahead of time, so I'm not wasting money. They'll come in a little sleeve like so, and you can take it out of the little sleeve, suspends it in the box, so that way a company like Tax Lab might be able to have their logo appear in that window, and this way I can manufacture lots of boxes regardless of if it's a branded product or not. So now we've got the hat tack, we've got our ball cap, and so I just loop it around the ball cap here. You can wear that. If not, you want to take a break, and now it's hanging. It's hanging there. Let's see if I can bring this in for you guys here. It's just hanging out. Just hanging out. Any little piece of metal. And also can create that little loop, so that way if you have a tree branch or anything else, now you have a place to hang your hat. So if it gets hot, working out, whatever you do with your hat and you don't want it to you don't have a place to set it, that it's not going to get ruined or demolished or what have you, hat tack's a great way to keep it nice, keep it safe, keep it neat, and it can be a lot of fun to mess around with. Go ahead and check that out at thehattack.com, but that's not why I want to talk to you guys today. Sorry for the plug. Yeah, it's fun when you have a little something, kind of plug of your own. It's a little hard to plug the tax service, but that's available too. Bookkeeping and all that fun stuff. I have been getting some questions about different tax regimes regarding those who are day traders and those who are investors and things of that nature. So that might be something I get into in the future. If you're somebody who wants to learn more about these different taxing regimes based on your frequency of trading and the kind of trading that you do on the stock market, please, not only should you tickle that little like button, but also comment down below. But once again, not why I want to talk to you guys today. What I want to talk to you guys today is one of our installments in our Robinhood order type series. Out of the 5 order types, this is the 3rd order type. Can you see my face? 3rd order type, which is the stop order. So I'm just pulling this up in the phone. Sorry if I'm looking down, but I'm just going to go to the help menu. Now let me hit record on the phone here so you guys can see this. And of course, I will go ahead and post this up there so you can see it as well. I'm going here to the Help Center, and maybe we'll move this a little bit further on. The Help Center here, opening this up, and I can see here it says, "Hello, how can we help?" Very, very nice of them. Amable, if you don't say. All right, so we want to do order OR. Oh, and just with the OR, we get order types. So order types, and we're doing stock orders, right? So we're going to go ahead and click on stock orders. And now the 3rd one, we've done market orders, so you can see that video. We've done limit orders. So if you haven't had a chance to watch that, you can watch that. Today, we're going to go over the stop orders. Click on that. And right here it says stop order, big print. It says a stop order is an order to buy or sell a stock once the price of the stock reaches a specific price, known as the stop price. So far it hasn't gotten into whether that price is going up or down or sideways or left or right or in between, whatever those crazy prices do. It's just saying that there is a stop price that you designate And depending on what you designate it to do at that price, you've picked a stop price. And a stop order does a specific thing at the stop price. Just to review what it says. When the stock hits your stop price, the stop order becomes a market order. So at that point, it becomes a market order. And once again, that's why I wanted to refer back to the market order. I'll give you a brief summary here. The market order just is a specific order type on Robinhood that tries to buy the stock at the best available price on the market. That's what it will attempt to do for you because you selected that. Once it triggers, once the stop order triggers at the stop price, it changes into a market order. And it will execute that market order, trying to get you the best price. There may be a slight fluctuation. It's basically what it's saying. Might be in your favor, might be not. But it's going to try to get the best price the market order. Investors often place stop loss orders to help minimize potential losses in case the stock moves in the wrong direction. What is the wrong direction? Obviously, the one that increases your potential losses. All right, so keep in mind short-term market fluctuations in a stock's price can trigger a stop order to turn into a market order. That's just basically saying it depends on the volatility of the stock, how quickly that triggers. And stocks are free to move according to market demand. Also, not all stocks support market orders during extended hours. So we have the regular trading hours and we have extended hours. Regular trading hours are marked on the New York Stock Exchange, and then there's some aftermarket trading that goes on. I don't know if this is you'll have to tell me maybe whether or not that is because they're going on the NASDAQ or other US type markets that exist in the US. I think that's what they're doing. If the market is closed, the order will be queued for market open. What that means, queued, just means it'll be put in line. It'll be put in line so that way when the market opens, it can execute. Learn more by checking out extended hours trading. Now we're going to talk about the two things that you can have it do once it reaches that stop price. And the first one is a buy stop order. It says, with a buy stop order, you can set a stop price above the current price of the stock market. So that means you cannot set a stop order below, only above the current market price. Buy stop order. It is a buy stop order. If the stock rises to your stop price, right? So you've set a price above the market order. Here's the market price. Here's your stop price that you set. Your buy stop, keep the mic here. Your buy stop order becomes a market order. So right here's the price. You set this price. The stock price rises up to that and bada bing, bada boom, turns into a market order. Now we've got one of our favorite, possibly non-existent stocks. I still haven't checked yet. You let me know whether this exists. But meow. Yeah, I gotta work on my meows. So here you go. Now we're getting back to this here, and we have our first example. It says, Meow is currently trading at, Meow is currently trading at $5 per share. You want to wait to purchase Meow. I'll probably get sick of it too, because you think it'll fall to a lower price. You also think that if Meow reaches $8, it may go higher. To help minimize your potential cost, you can set your stop price to $8. So So let's see. It's currently trading at 5. You think it'll go to a lower price? So you think it's going to go to a lower price? $8. It may go higher. You want to purchase because you think it'll fall to a lower price. So you think it's going to fall. You also think, so you think two things. You think it's going to fall, but you also think that if Meow reaches, if Meow reaches $8 a share, it might go higher. To help minimize your potential costs, so you're trying to get it cheap, you can set a stop price to 8, meaning that it says here, we'll just continue with it. If Meow raises to $8 or higher, your buy stop order becomes a buy market order. Then Meow is purchased at the best price currently available. If Meow stays below $8, a market order isn't triggered and no shares are purchased. That's the buy stop order. How I might use this is, let's say I'm trying to dollar cost average down. So I'm trying to buy stocks of a certain, so let's say that I have a certain stock that I'm trying to dollar cost average down on. I think I actually may have one here, so let me pull this up. It's one stock I've actually gotten for WHG. Is a stock I've been working on dollar cost averaging down. However, it has dropped lower than where I would like to see it. A little bit worried it might still go even lower, and I don't necessarily want to buy a stock that's continually going down, 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 down. I don't want to dollar cost average myself on a bad bet. If I want a stop order, what I can do is actually, so where the price is now, I might say, hey, I will start dollar cost averaging in again at X price. Let's go ahead and take a look. I think if we look at this, it'll be a little easier here. So we'll just pick up the recording here. So right now, Westwood Holdings, WHG, is trading at $27.42 at the time of this report. And my average price is $33.23. I've bought it at higher prices previously. However, that's a pretty big drop right there. It's been trading at a lower price pretty consistently. And if we look, maybe we'll look at the week. It's had some fluctuations up and down, but over the last 3 months, it's been down. Will it come back up again? I don't know. By how much? I don't know. But if I want to stay in this stock and I want a dollar cost average down, I still want to buy it low. It's just I don't want to double down on my losses. What I'll do is actually set, and we're going to go here to it was 33.23, and we're at 27. Let's say 30. What I can do is just tap on buy, and we're going to change the order type. Right now it's automatically set to market order. I'll hold this up so that way it looks a little better. I'm not looking down the whole time. Right here, stop order, not the trailing stop, not the stop limit. This is just a stop order. Continue. And we said $30, right? So if it gets to $30, that's going to help me continue to dollar cost average down, but I'll also know that I'm not doubling down on something that's failing. So we're going to do continue, and we'll just extend that out. Now remember, you have to have the equity in your account, whether that's through margin or actual money in your account to do that. And we're just going to do 2. We're going to do 2. It is not a taxable event to buy a stock, only a taxable event to sell it. That'll be a total of $60, so I need to have at least $60 in my account. That's going to be in reserve, so that way if that hits, Robinhood can fulfill that order. So I'm going to review and swipe up. and it's not filled yet because the market hasn't reached that stop price. That would be an example of a buy stop order and when I might use it. Let's get back to the examples here. Look at the sell stop orders, and we'll see if I can't come up with a less feline type of example. With a sell stop order, you can set a stop price below the price of the stock. If the stock falls to your stop price, your sell stop order becomes a sell market order. So what that basically means is you set your stop price. If it is a sell stop order, if it gets that price, because that price has to be below the current market price. So it's going down and it's sinking. The ship is sinking, the Titanic's going down, all the little kitties are getting wet, and Meow doesn't like it. Oh, meow, meow. Oh, two. We like two. Two's better than one on that. Meow Meow is currently trading at $10 per share. You want to wait to sell Meow Meow. So that's almost musical. Because you think it'll rise to a higher price. To help protect yourself, in case Meow Meow reverses itself and begins falling, you can set a stop price to $8. So you like the stock, you want to stay in the stock, but you don't want to get wiped out because of it's falling. You say, you know what? Let's say we're going to cut our losses here. Kind of where that came from, right? So if Meow Meow falls to $8 or lower, your sell stop order becomes a sell market order. We'll hold this up a little bit more so the eye contact's a little better. If Meow Meow stays above $8, the market order isn't triggered and you keep your shares. If I wanted to protect myself against a falling stock, I might set this price. I looked at the stocks I do have. There wasn't a particular one which I was worried would fall dramatically. I don't think that WHG is actually tanking. I just think it may take a while to recover, or it may not. I'd like to dollar cost average down, but I don't need to let my money continually sink on that as it finds its resting point. That will limit my gains on that stock as I try to dollar cost average down, because I won't be taking the low end of that, but in a way it can also help to limit losses. Remember to like, subscribe, share, comment, tickle that little like button. Don't forget, if you have yet to start your Robinhood journey or Webull, you can go ahead and check those links in the description to get your free stock. And I wish you all the success.